The S&P 500 is down 15%, QQQ is down 27%, SCHD is down 2.5%, Amazon down 45%, Apple down 19%, Meta down 63%, even good old Home Depot is down 20%. Bitcoin is down 64% and Ethereum is down 66%. So many stocks are falling and continuing to fall, and it makes me think that maybe we should hold off on this investing thing. And that's probably how a lot of you are thinking about this, especially if you're looking at your 401k and it turned into a 201k over the last couple months. Is it too late to invest? This is a great question from Jason, and I would even take it one step further and say, maybe people are thinking it's too early to invest because we're thinking that it's going to drop even more. As you guys know, my name's Nolan Govea, or Professor G, and I'm an actual university professor, and I love doing office hours in my day job, so I did that for a segment on this YouTube channel where it's uncut, unedited, just answering a question as if you came to me in my office hours. So for this question, I love this one, and it's one that I think everyone is kind of asking. What should we be doing at this point, or what should we be thinking about? And especially for those of you that are starting out, this is definitely going to be a little bit crazier, a little bit scarier for sure. And those of you that have been through a couple of market cycles, you understand that this is just one of those times where it's something that is necessary, it's something that happens, and we get through it. So let's talk about why we just invest in the first place. When you are putting money into a stock, you're actually putting money into a company, and you're basically saying, I believe that this company will be worth more in the future, so I'm willing to part with a little bit of my money now, give this money to the company, and let them be able to use that as capital to be able to build research and development, get stronger, and in 5 years, I believe that they're going to be worth more, and for my investment, they're going to pay me a little bit because they've grown. And so that's the whole idea with this. And if that's not the way that you're investing, then you're more speculating, you're more gambling. And I just don't like that. That's not the way that I do it. I do know a lot of people that make money doing that, more like the day trading scene. And that's just not something that I do personally. When I'm investing, I'm actually looking at the company the same way that like Warren Buffett or somebody like that would look at it. I'm looking, is there value in the company? And so for me, when I go to put money into a new investment, I spend hours, sometimes hundreds of hours, too many hours probably, looking at this investment. And the reason for that is I don't like to part with my money for something that's just a whim. And I hope that you are the same way. The quick answer with is it too early or too late or whatever is, in my opinion, no. I think that right now we're in a time where the market is down. And for those of you that have been investing, especially when the market was much higher, this should just look like a sale to you. But I want you to make sure and understand that just because something is down in price, that doesn't mean that it's a good buy, right? Just because something is down 80% doesn't mean that, oh, I'll buy it now because when it goes back up, I'm going to make that 80%. Sometimes these companies drop so much because they're losing market share, they're losing competitive advantage, they're just dying out as a company. And so you need to be able to differentiate between the two. And sometimes during a very volatile time, like we're in right now with this market downturn and the economic downturn and interest rates, it's kind of hard to figure out, is this company failing or are they just dying down a little bit because of the recession that might happen or something of that nature? So key things that I look for when I'm looking into starting a new position or just looking at the companies that I do have invested in or the ETFs are things like revenue, the company's gross profits. I'm looking at their expenses, especially the difference in expenses from last quarter to this quarter or maybe even last year to this year. If something is rising heavily, we need to understand that that really affects how much money they're going to be bringing in. I also like to look at things like research and development. How much money are they putting towards innovation? And I like to look at, for the past 5 years, how much money have they put into things like innovation? And you can look at things like that through their 10K. You can look at, you can listen to their earnings calls. You can see if there's any news stories on the CEO or on the company. That's the types of things that I like to look for. For me personally, when I'm looking to buy into a new stock or even just understand a new ETF or something, what I'm looking for is, do these companies have competitive advantage and enough competitive advantage to be able to weather a storm? Because it's not a matter of if there's going to be a storm, it's just when. And every 5 to 10 years or so, something happens in the world of business or just in the world of the economy and things like that. And so we have to know that things change and things happen and which companies are going to be able to adapt with that change. And it's actually very hard to know what companies are going to make it through. There could be very, very innovative type companies that you think might be able to stick with it and keep with the technology, but then they decide to go a different route and then things really start dying out. It's kind of like what's happening with Facebook or Meta or whatever they're called nowadays. There's a lot of interesting calls happening by Mark Zuckerberg, and had he just kind of stuck with what he had, which was this data information company, he probably would be okay right now, but he wanted to switch it totally to this Meta platform. And so if you were invested in Facebook for its business model from 5 to 10 years ago, it's much different now. So all that to say that right now, with all the volatility, all the craziness, what I'm doing most and what I recommend most is that you really do a lot of research, but that most of my money specifically is going into ETFs for now. It's much less risky. It's ones that I know like the back of my hand and that I just love, and that I know that no matter what, a couple of the companies in that ETF are going to die out. But a couple of those companies within the ETF are going to then take over the market share, and that's going to make them grow. Unfortunately, I'm not smart enough or wise enough to know exactly which ones, and I'm not going to act like I do know which ones are going to be the absolute best. And so I'd rather just pick a bunch of them, and overall it should rise. My investment should rise. And so that's why I like, and I know that I've said this a couple times in different videos, but that's why I like to have a foundational ETF, something like a full stock market ETF like VTI, or like the S&P 500, which is basically the whole stock market, but just 500 of our top companies there. So I like an ETF for that category. I also like a growth type category because those are fun. Companies like Tesla and Nvidia and other technology companies, because when the market goes up, those ones boom. But lately the market's been down, and those are the ones that are hit the hardest. So a portion of my portfolio is going to that. And then as far as dividends, that would be the next type of ETF that I really like. And right now it's one of the better plays, especially as you can see, SCHD, like I said at the beginning of this video, is one of the ETFs that's been hit the least in this volatile time. It's only down 2.5%. So that's why I like having something like that in your portfolio, because there's going to be times when it's down, times when it's up, but it's good to have it go less down if possible. So right now, during all the craziness, I'm just sticking with what I know. I am researching other types of stocks and other companies and watching what's happening, but I'm not allocating a lot of extra money to that because your guys' thoughts are correct in that we may be going down even further in the market due to a recession that could possibly happen or other economic things that possibly could happen. So I'm watching, I'm dollar cost averaging, I'm not changing up the way I was investing, and I'm also not FOMOing in and just buying something that's down just because it's down. I would love to hear what you guys are invested in, so go ahead and throw that down in the comment section below, and as always, ask your questions in the comment sections and I'll pick one of yours for next week's office hours.